this morning. So a business consultant, and you may be wondering what do I mean by business consultant. So when you have tax issues, I'm your girl. You need to restructure your business. Yeah, I'm your girl. You're talking about accounting. Okay, how do I put my accounting in place? Yeah, and I work with Registry Consulting. So not to take too much of our time, so this morning we'll be looking at property taxes. So our brand is a real estate to agro business, wealth creation like Mr. Benga said, and we are creating wealth by investing in real estate whereby people can actually practice agriculture before building on this land. So you are probably wondering, what are the taxes related to this land I'm acquiring? When I start building on it, what are the taxes I'm supposed to have at the back of my mind that I need to start paying? And so that is our focus for this morning. And so property taxes. So this morning we'll be looking at what is property taxes, what the property taxes in Nigeria, property valuation, property tax rate, property tax collection, properties exempted from property tax, and other related taxes. Property taxes are a fundamental aspect of local taxation system worldwide, including Nigeria. They are a form of direct taxation imposed on real estate properties, both residential and commercial, as well as land. These taxes play a crucial role in generating revenue for the government, funding essential services, and promoting responsible property ownership. Throughout this note, we will delve deeper into the specifics of property taxes in Nigeria, exploring their types, valuation methods, tax rates, exemptions, and other property-related taxes. Understanding property tax is crucial for both property owners and the government, as it helps create a fair and sustainable system for financing public goods and services, essential for the growth and development of communities. So we know right now, government is very aggressive when it comes to taxes. Why? They are trying to increase their revenue, and oil is not doing that well, and so they are putting pressure on taxes to be paid in different aspects. So there are different aspects of taxes, but we'll be focusing on just taxes related to owning a land. So you own a land, either you've developed it or either you've not developed it. So what are the taxes you are looking at? So what is property tax? Property tax, as the name implies, is simply a tax levied on real property and transactions on real property. Real property here refers to land or land and buildings, or variant of these factors. Property tax is a tax paid on property of an individual legal entity, such as corporation. Commonly, property tax is calculated by the local government where the property is located and paid to the owner of the property. Usually, when you pay tax to the government, it is used to improve and maintain public infrastructure, including the roads we travel on and public services such as schools, emergency services, and welfare programs. The tax is based on the value of owned property, including land. Property is a source of government revenue in Nigeria. So when we're looking at property tax, so you have a land. So I know right now, Advent is based in Ogun State, Oyo State, Lagos. So let's say we have lands in these areas, and you're looking at it that, okay, I have a land and someone is telling me to come and pay taxes. What are they using those taxes to do? Like, why am I even paying the taxes? So they actually use the public schools. That's why some public schools, before you go to those public schools, they will tell you that, okay, your parents, either your mother or your father, go and bring their tax clearance, because they want to know if your parents are tax compliant. Because is this your taxes they are using to improve public schools all around, and they are using to actually improve our roads. But I know we have this which road? We don't have road in Nigeria, but the money, the taxes, is for the improvement of infrastructure in our country. So we have categories of properties. We have the residential properties. So the residential properties are the houses I and you will live in. So these are like our normal houses. Your parents built a house, so these are residential houses where you live. And your commercial properties is a building like this. So Centage property, this Centage Plaza has a lot of offices in its building. So this building is an example of commercial properties. And we have industrial properties. So these are buildings that are actually used for manufacturing. You understand? Those people that are into either the production of tin. Okay, Milo too is actually like a manufacturing process because it goes through a process. So agricultural land, so this will actually be applicable to hardbond because before you actually use your land for homes, you actually use that land for agriculture for that main time. So far, you've actually gotten the land. So agricultural land, that's very explanatory. Land for agriculture. Vacant land, that is the land is just there. No developments, it's just there, you just bought it, maybe you're looking at for capital appreciation to sell it later in the future. And we have vacation properties. So we have like a resort that is maybe beside maybe a beach or something like that. So those are vacation properties. Mixed use properties, that means I'm living there and I'm also giving out some parts, for companies to use. And we have publicly owned properties. Those are government properties. Non-profit and religious properties are churches and mosques. So now that we've been able to determine the different properties that we have available, so the question is, how do I know the rate I need to pay as my property tax as it relates to the land I have? So in Nigeria, property taxes include neighborhood improvement charges, tenement rates, and ground rents. However, these taxes have been consolidated into the land use charge. So what am I saying? So all before 2001, so we have different taxes. So if you have land, so there's something, local government will come. They'll tell you one charge is neighborhood improvement charges. They'll give you the bill, you will pay. And the same local government, they'll come, they'll tell you one is tenement rate. They'll give you the bill, you don't have any choice, you pay. They'll tell you one is ground rent, they'll give you the bill, you don't have any choice, you need to pay. So Lagos State started it. So in 2001, they looked at it that to avoid multiplicity of tax, that means like charging tax on one sources of income. So you are giving me different kind of tax on just one land that I have. What happened now? So because of that, so Lagos State came up with land use charge law of 2001, which says that all these taxes, let's consolidate it and actually name it as one. I'm sure we're actually all head of land use charge because right now because like I said, they're looking for money, government is looking for money, and they are rolling out demand notice for this particular type of tax, land use charge. So all these other property taxes have actually now been joined together. They started it in 2001, whereby during the tenure of Asiwaju Bola Tinubu, whereby it consolidates ground rent, tenement rates, and neighborhood improvement rate into one single tax, known as land use tax. This modus operandi is that states will collect all taxes, including those that constitutionally the domain of the local governments, and then a pre-agreed formula is used to share the proceeds among all tiers of government. So once the value of the land is arrived at, rates are applied to determine tax payable. So in this so they're saying that, okay, you have a land, so let's determine the value of the land. So we have a specified schedule that shows the rates you're supposed to apply depending on the categories of properties we mentioned earlier. So depending on the categories, we have different rates. So if you know your land falls in this category, this is the rate you are going to apply. But this rate is actually going to now be calculated depending on the value of your land, which we'll look at in an upcoming slide. Also, the Oyo State Land Use Charge 2012 was patterned after the Lagos State Land Use Charge 2001. The law was known as the Land Use Charge Law 2012, and it provided that a yearly charge will be paid by property owner within the state. The charge to be paid will be determined by the value of the property. So looking at how effective this law is, and looking at the fact that even the citizens of Lagos State, the members here, they were happy because local government come in every now and then, giving them different bills just because they occupy just one land is becoming like burdensome. But so looking at how effective it was in Lagos State, Oyo State too was the next one to actually adopt that law. So they call their own law Land Use Chart 2012. So after this, different kind of states, majority of all states started this land use chart law after this 2012, because all these were now abolished in 2013, whereas everybody started using land use chart, whereby all your land, any category of properties you have, you are not just charged just once, which is the land use charge. So now we've mentioned the fact that before you actually determine your land use charge, that means the bill to be with the tax to be paid if you own any land wherever it is. We're saying that you determine the rate which has been given by the government. Also, you need to determine the value of your property before you know the appropriate charge. So now, how do you value your property? I have a question for me. So property valuation is a critical component of property taxation, as it determines the asset value of a property, which in turn influences the amount of property tax a property owner is required to pay. The process of property valuation involves estimating the market value or fair value of a property, which is used as a basis for calculating property taxes. There are three methods of property evaluation. We have the market-based approach. So what do I mean by the market-based approach? So now, we have 2 plots of land in Ikeja. We have 2 plots of land in Ikoyi, and we have 2 plots of land in Lekki. The same square meter, the same calculation of land, but it's being sold at different prices. Why? Depending on the area that it is. So in Ikeja, I may not be accurate with the amount. So in Ikeja, a 2 plot of land may be going for 20 million naira. In Ikoyi, a 2 plot of land may be going for maybe 50 million naira, and Lekki is going for 30 million naira. So why exactly is that? It's depending on the area that it is, the kind of people, the caliber of people that are in that area. So market-based approach is saying that if your land is in Ikeja, so if you have a vacant land, for example, that means no development on it. Look at it, okay, the latest vacant land that was sold in Ikeja, how much was it sold for? Is it the same 2 plots? Okay, that means the 2 plots that was sold maybe in the last 2 months and the last 1 month, how much was it sold for? Okay, it was sold for 20 million naira. So it is assumed that that's the market price of that land at that period in time. Do you understand that aspect? So when we say cost-based approach, so that cost-based approach is not saying that, okay, I want to sell this building. So I'm not saying that for me to actually like break down this building and build it the exact same way again, build it up the exact same way again, what will it cost me to be able to replicate something like this in this same area? So you're calculating the cost of, okay, if I'm actually to build this, I'm going to need so bags of cement, so bags of block. I'm going to need, okay, I need to import all these things. Okay, or what was here imported before, or I want to use imported something. So and what's the cost of importing this? What's the cost of actually bringing the building up? So you are actually bringing the cost together, and you are actually now valuing your assets based on the cost to actually rebuild the asset if it was to be brought down. So the income-based approach is like this Sentate Plaza, now like I mentioned, they have different offices in this building, and I'm looking at it that before I can determine the value of my assets, how much will Abon pay me in the next 5 years for rent? How much will Leadway, I think Leadway is downstairs, how much will Leadway pay me in the next 5 years? And that company. So you are trying to calculate the total income they are expected to get from the building, maybe in the next 5 years. So there are valuation techniques which you may need to actually engage an expert, which my company does, an expert to actually operate, because now we consider the time value of money. So what is the income I'm going to earn from this property in the next 5 years, in the next 10 years? So I apply my time value of money, so I determine the value of my assets at that point in time. So at that point, I've determined the value of my assets, and now I need to determine the rate I need to apply to the value of my assets. So property tax rates. Property tax rates in Nigeria can vary depending on the state, local government area, and the specific property type. There are generally 2 main types of property tax rate applied in Nigeria. We have the flat rates. Flat property tax rate are fixed percentage of the assessed property value, regardless of the property's market value, location, or other factors. Property owners pay the same percentage of the property's value as tax. Flat rates are often used for simplicity and ease of administration, especially in rural or less developed areas where property values may not vary significantly. For example, a flat property tax rate of 1% means the property owners pay 1% of their property assessed value as tax. So this flat rate is just saying that if I'm going to give you a schedule that for your category of property, this is the rate depending on whatever value it is. So you have land in different areas, and we know that depending on where you are, the value of your property varies. So you have a fixed rate and you need to apply it on the value of your assets. So irrespective of maybe the land is in Ikoyi, maybe because the land is in Ikoyi, so the rate you're supposed to use is maybe 5%, and because the land is in Ibadan, the rate you're supposed to use is maybe 2% because Ibadan is a more less. So this flat rate method is just saying that irrespective of where you are, we have a single rate that is applicable for each category of properties. So we have the graduated rates, also called ad valorem. So graduated property tax rate, also known as the ad valorem rate, are variable rates that increases as the assessed value of the property increases. In this system, higher value properties are taxed at a higher percentage of their assessed value, while lower value properties are taxed at a lower percentage. So what we're saying is that, we mentioned Ikoyi, the central plot of land could be 40 million naira, and in Ikeja, the central plot of land could be 20 million naira. So imagine, so this graduated is saying that, let's be fair, though it's the same thing they are adopting payee. So let's be fair, those people that their land's worth more should pay higher tax as compared to those ones that their land worth lower. So if you are saying, so they have like a schedule, so it's graduated like it said. So if your land from a land that worth 0 to 10 million naira, apply 1%. So from 10 million naira and to 20 million naira, apply 2%. From 20 million naira to 30 million naira, apply 3%. So that means you in Ikeja, if you want to determine your land use charge, so you're looking at it, so the value of my land costs 20 million naira. So the first 10 million naira, I'll apply 10%, write the figure somewhere. So the next 10 million naira, I'll apply 2%, write the figure somewhere. Then that's my total tax payable. That means someone in Ikoyi will keep going. So the next 10 million naira, I'm applying 3%, write the figure somewhere. The next 10 million naira, I'm applying 3%, write the figure somewhere, and I'm getting the same plot of land, but different taxes, because they're trying to say that, okay, because the value of your land was more, you should pay more taxes. Do you understand that one? Am I communicating? Is there any questions so far?
We are good.
Are you sure?
That's why we are right.
Okay, that's cool. So now we've mentioned how to calculate the value of your assets, and now these are the rates applicable to different categories of assets. So I'll make this actually very peculiar to Adbond. So right now, I think Adbond has estate. Like, do we have estate? We only have lands. So right now, even the government is looking for money. On a normal day, you actually having a vacant property and an open empty land, which Adbond has in Adbond has that a lot. We're supposed to be paying land use charge depending on the value of the land, at this percentage applied to the value of the land. On a normal day, when the state government realizes that, okay, this area, they've not paid their taxes for a period of time, they're supposed to send you a demand notice, and you knowing how to calculate it, you are going to sit back, what's the value of my land, you apply the applicable rates, then you can respond to them, be like, okay, you gave me this, but this is what it's supposed to be. That means for all the land Adbond has in various states, every year it's supposed to pay land use charge to each state, which I'm actually sure Adbond does, because Adbond is very compliant in that aspect. So for residential property, we have 0.0394. So this one is just if it's just the owner, our mothers and fathers house, or our own house. Sorry, don't mind me. Our own house that we built ourselves and we're living. So we determine the value of that land, whatever method you want to use. You apply the rate, then you get how much you're supposed to pay on a yearly basis. So this one, the owner and you have tenants that are paying rent to you. So the reason why the rate is different is, yeah, you are just the only one. You are not getting any rental income. But yeah, you are there and you have other people that are paying rent to you. That means you are getting a part income from that property. So that's why the rate is actually different. And residential property without owner in residence is the same thing as owner occupied, because even though it's still the same concept, so they are assuming that if you were actually there, you will not be able to earn that income. So which is why the same tax rate is applicable. And we have the industrial properties, like I mentioned, the manufacturing firms and all. That's the rate applicable. Commercial properties like centage. So now, okay, commercial properties, vacant properties and open land, agricultural land. So the next question is, the burden of paying this land use charge is on who? That's the next question. So let's use this centage plaza. The burden of paying land use charge is not on the tenant, it's on the landowner. So if you own the land, you are the one that has that responsibility to pay the land use charge. Your tenant has no business with it. So far you are the landowner, you are the property owner. It's your name that is in the books of the property. You are the one that has responsibility. So you as a tenant does not have, you don't have any business with this land use charge. So property tax collection. So I'm asking that who is responsible for collecting property tax, which we've actually established to be land use charge. Depending on their location, property owners must pay property tax on their property annually or biannually. The property owner must pay the amount owed by a specific date or risk fines and penalties to the state government. So wherever state it is you are, your property tax will be paid to the state government. If you're in Ogun State, we have Lagos State Internal Revenue through town planning. We have Ogun State, wherever it is you are, so you are obligated as a property owner to pay this land use charge to your state government, the collecting body of. So now, what are the properties exempted from property tax? So we've mentioned the fact that there are different kind of properties, and we're saying that, okay, all properties, so far you have vacant land, you've developed it or not, you're supposed to pay tax. But there are some properties that are exempted from this property tax, land use charge. So we have a building owned and occupied by a religious body and used exclusively for public worship or non-paying fee regulatory education. So our churches, our mosques, and there are some registration churches and mosques need to go through. That's on a different aspect entirely. So for you to actually say that, oh, I'm not going to pay land use charge, because you fall into this category, you must have done the necessary things for you to qualify as a religious body. And maybe for a non-fee paying religious education, you must have actually done the necessity, checked all the criteria to fall into this category before you can fight your case and say, I'm not paying land use charge because I fall in this category. So public or religious cemeteries and burial grounds, excluding private cemeteries or any public cemetery run by a private enterprise, whether in public-private partnership, joint venture, or any other such commercial purpose. So, especially for people on the island, and not even just island, let me not even say island, even on the mainland, some exotic places on the mainland, we have some private cemeteries that even when you get there, apart from the fact that you think about dead people, lying there, you yourself, you want to relax because of the environment they created for the dead. So, apart from those ones, Apart from those private cemeteries, so talking about public cemeteries, maybe I don't think Nigeria is in better in that aspect, because you get some public cemeteries and bushes everywhere is overgrown and it's looking tattered, and you're looking at it that even the dead are not sleeping well. But apart from all those public cemeteries, every other private cemetery, maybe you are saying that you're in partnership with the government or the joint venture, so far you are actually earning income from that public and private cemetery, you are not part of people exempted from property taxes. So you are actually going to pay property. So the only people exempted when it comes to cemeteries are public or religious cemeteries, and a recognized public school or educational institution. So we know, apart from all of those our private entities that is definitely for profit making, so we have federal schools, we have state schools, and we have secondary schools, private school and primary schools that are public. They are for actually to improve the lifestyle of the citizens, to actually reduce the burdens on every one of us, you know. So apart from those schools actually exempted from paying this property tax. So the other one is property used as public library. I'm not talking about private library right now. Public library, that means owned by the government, managed by the government, and when you go there, you don't need to pay, just need to walk in, maybe fill a registration form to know you're their member. So you walk in, you pick any book of your choice, then, you know, or you just go there to go and read. So those public libraries, they are also exempted from property tax. All official places of recognized obas and chiefs in the state. So our obas, our Otun OC, so far they are recognized, they are not just Otun OC with just name. So far they are recognized, and like they swore them in according to the tradition of each state. So wherever it is they are exempted from paying the property tax. So any property specifically exempted by the Executive Council by notice published in the Gazette. So what I'm saying is, so government can come up today and publish a gazette and say, okay, these are additional list of properties, categories of properties that are exempted from property tax. So those, so far, anytime the government comes up with that list, so that will also be included to properties exempted from property tax. So other property related taxes. So we have capital gains tax, withholding tax, and stamp duty. So capital gain tax arises from when you dispose your property. So maybe you sell your building, so you bought it for 20 million naira, you sold it for 40 million naira, so you gained 20 million naira. So you're supposed to pay CGT on that extra gain. So before you arrive on the total gain, you know, you consider either logistics, I paid the sales people this money, I paid what is it called, this one, I paid this one time to advertise it. So after deducting all those expenses, you arrive at the gain you earned. So you charge your capital gains tax, which is 10%. 10% of gains made on real estate disposal after sundry adjustments. So we have the withholding tax. Withholding tax, when rent, so withholding tax is applicable to property owners that get rent. So you as a property owner, you're expecting 2 million naira from your tenant, and your tenant sends you 1.8, and you're asking your tenant that, Alpha, where is my 200,000 naira? What happened to it? So that's because so far that your tenant is government collecting agency. What do I mean by government collecting agency? That means your tenant is registered either as a corporate entity, a business name. So far they are registered as a collecting agency with the government. So you're asking the person, are you registered with FRS or Lagos State? Because I want to know if you have the ability to remit the withholding tax you are deducting from my money. So if you are just like an individual, like Ile Agbole something, and the man is not deducting withholding tax, you're asking the man, do you even have payer ID? Do you have tax identification number to say you want to remit it? So those ones, they can't deduct withholding tax. But for a corporate entity, before what's it called, you pay your rent, you're supposed to withhold 10% tax which will be remitted to the federal government. So we have the stamp duty. So this is collected on every real estate related document agreement to authenticate them and to ensure the validity of the documents. Stamp duty is calculated at a given rate of the total amount of value of subject property or transaction question. So now we have our C of O. For us to claim ownership of the land, we have different documents that are actually part of our land documentations. So for those documents to be valid, this stamp duty has to be paid to the government, and they make any document that has stamp duty on is very, very valid, because they say document that doesn't have this is just like an agreement. It's not a contract, it's just an agreement between me and it is not tenable in court.